Hello, everyone. So it's Sunday, November 7th, 2021. Let me know if you can hear me. Billy is around. You might hear some fireworks. They're still letting off fireworks. It's November 5th weekend. So just as usual, I'm a little early. So we've got Alan Zibelman, Neil Hahn, we've got Sehon from Bristol, William Stewart. Nice to see everyone around. Dmitry Shmerkovich, Jared Smith. Hi, Jared. James says we hear you. That's good. That's good. Jillian B from Perthshire or Perthshire. Sounds good. Okay. Double J says sold all my Bitcoin. Super Mario and the Billster. Yeah, the Billster, he needs help. He's not seeing well at all anymore, but that's, he's almost 14. So anyway, I'm taking him out for more walks outside because he has trouble in the garden seeing things. So anyway, remember, yeah, the 5th of November. Stuart Ogilvie from Scotland. I was just listening to a video about Joe Biden when he was with Prince Charles' wife at the COP26. Apparently, he had some problems with his, heirs. He let out some FARTSs, pretty embarrassing. Alain Roy, bonjour Alain, from Montreal or Montreal in Canada, or Quebec. Yeah, the boss is always chilling on the sofa. Yeah, he's got a little blanket as well, his favorite one. So yeah, the subject today, I mean, we always talk about different things, but the title of the live stream is Central Bankers' Credibility Melting Away. And yeah, I personally think it is. And the bond markets in the last couple of weeks, we saw in Australia, Canada, the UK, Italy, we saw yields spike higher. They have come down, but I think there was a lot of intervention, but I don't think it's over yet. I think prices are going to continue to rise. This week, we've got CPI coming out for the US. We're going to have a look at what people are forecasting for that. So hashtag jail Biden now. Cupid stunt. Good evening, Mario and Billy Bullion, and everyone else from Warrington, UK. Let's go, Brandon, says Double J. Yeah, John. Yeah, I was reading something, and dogs already, their visions aren't as good as ours. So it's probably not as bad for them, but it's not nice to see him not able to do whatever he wants. Double J, you're my silver guru professor. Yeah, I've got some charts we can look at today of gold and silver in different currencies. They're starting to look good in all currencies, not just the dollar. So it shows to me that gold and silver are going up against all fiat currencies, which is really bullish. It's not just, the dollar is actually being fairly strong, but gold's also been going up versus other currencies and the dollar. Sandy Anderson from Denmark. Sarah Brown. Corrupt 69, Rich Howells. So we got another 5 minutes. Just wait for people to come on. We've only got like 165 people. I usually don't buy newspapers, but I bought the Daily Mail. I think it was on Friday or the day before, and I bought it yesterday as well. There's some interesting articles we can look at. One of them is actually, and I'll wait until we start at 9, is Bailey, the governor of the Bank of England. He says, "I'm very sorry for rising inflation." At least he admits, it's his fault and the Bank of England's fault. But he made a really interesting comment at the end, which I don't think many people have talked about, and I think is very significant. Here's the article over here. And there's this pretty interesting article here as well. I think it's the US Virgin Islands. They've subpoenaed Barclays Bank for information because of the CEO who resigned, Staley, was good buddies with this guy here. What did I shoot today? It was, we played like a team competition. It was a team of 4, and we took the 3 best scores. I think we had 110 points. It was Stableford. So we didn't win, but played fairly well. And it's winter here almost, so they have these team competitions. Nothing really serious anymore. But we had a nice lunch at the golf club. My wife and I went later on to have a Sunday roast. It was really good. So yeah, it was a nice day. Who else? Girolgi is here. Am I ready for deflation? Well, it depends what you mean by deflation. If you mean prices falling, like the CPI, I think it's only happened twice in the last 80 years in 1 year. If you're talking about the collapse of everything, of the economy, maybe yes. But what we're going to see the currencies collapse as well. So it's going to be a hyperinflation of the currency and a deflation of everything. It's going to be really bad. It's not going to be fun. But I think there's a lot of opportunities, and I think gold, silver, commodities are a great opportunity. And it's just people still have time to get on board. That's my opinion. I'm not advising people, but that's why we're going to look at some charts today of gold and silver. Gold and silver did well at the end of last week. Alan Zibelman says he shot a squirrel today. Oh boy. Where do you think commodity prices are right now? Well, they are where they are. I mean, but I think commodities are going to continue. I don't think they're going to go. It's not that commodities are going to go up. It's just that the currencies are going to be losing a lot of credibility and value. So everything that's can't be produced out of thin air will gain value. So I guess you mean in terms of, let's say, a baseball game. I think we're still in the first third of the game, so in the first 3 innings. So still got a long way. That's my opinion. I could be wrong. Could be longer, could be shorter. Subpoena Billy's records. All right, we've got another minute to go. Merkskar, capital of Turkey. I guess, I don't know if he's in the capital of Turkey, which is Ankara. Ankara. It's not Istanbul. I know that. Steve F., could we see some deflation on the Billy mugs? I'll have a look. I don't know if I can change the lower the price. It's set by Teespring. The warm-hearted genius. I heard that November is a bullish month. Will precious metals go down again this week? Well, they went up last week, so I'm not sure what you mean by going down again. I don't know what they're going to do in the short term. Is very difficult, but they're looking quite positive for the long term. Carlos Garcia is here. Hi, Carlos. Mr. B says greetings, Mario and Billy. Dr. Delbert, do you think Keith? Do you hear Keith Newmar holding silver till the powers that be? Yeah, I heard that. I think he's doing the right thing. I think a lot of mining companies should do that. A lot of people who run mining companies are not as keyed up. They're not as intelligent, I would say, as Keith Newmeyer. Keith Newmeyer is a sound money person, I would say, and he's doing, holding back silver. I'm not sure how much he's holding back. A lot of companies, they run just to generate fiat profits. All they care about probably is the share price. But I think I think Jim Sinclair said years ago that a lot of the mining companies, they should try to keep as much, hold on to their money as much as possible. And by that, I mean gold and silver. Sarge 27271, one more temp down coming. Who knows? I think we're getting near the period where it's already quite tough to get gold and silver physical in the retail market for us. So I think it's going to be even more difficult coming very soon. That's my feeling. That's how I feel about it. I think we're ready to probably break out. Rochelle Fernandez, did you see the interview of Jeff Wigman on Palisades Radio? He admitted that gold would go up drastically by 2023. No, I haven't seen that interview. Okay, so it's gone. So I guess a lot of you are here now. So yeah, central banker credibility. I made a video, I think a couple of weeks ago or so, and about, I'm gonna share something with you guys about this man here. His name is Jens Weidmann, the German who tried and failed to hold back Eurozone money printing. The ECB's fierce hawk resigned last month. So yeah, he's the head of the German Bundesbank, the German central bank. And he's been trying for years to rein in, the money printing, the negative rates, and he's just given up. And I said at the time, I think 2 or 3 weeks, as I said ago, I made a video about this. I thought that was very significant. I think he's leaving a sinking ship. You can see here, Eurozone inflation. It's not as bad as the American inflation. It's still just over 4%. And I think it's probably doctored as well. And you can see how much QE the ECB is doing as well. So this guy is left. He was a lonely voice in the ECB for some semblance of monetary, rectitude. But from reading this article, it looks like they're going to nominate someone else for the Bundesbank to head the Bundesbank. It's probably going to be a hawkish person like this guy. But the article admits at the end that they won't, it's still going to be the same, like this guy Kramer says here. He was in a clear minority, and the majority have a different idea of ECB policy, and they will continue with this. They had a majority before, and they'll have a majority after. And I think he's basically leaving a sinking ship. He doesn't want to be seen as the head of the Bundesbank when you've had basically a hyperinflation. That's where I see things going. And by hyperinflation, I mean loss of confidence in the currency. And we're going to see everything from gold, silver, to real tangible assets go up in value versus every currency. That's what's going to happen. I think the central bankers we saw last week, what's his name, Jay Powell, they announced that they're going to start tapering, but they said they didn't even discuss rate rises. And I think that's, they're way behind the curve, because with CPI, which is coming out, I'm going to show you guys, CPI is coming out. Where is it here? Oh, I have to bring it back up. But CPI is coming out this week in the US. And I thought, oh, maybe it's going to come down, because after 5 months of it being over 5%, I thought, oh, maybe it's going to come down a little bit. But let me show you here. Let's share this. This is from investing.com. So here we go. So let's have a look. So Tuesday, we're going to get, as you see here, Tuesday, November 9th, we're going to get PPI, which is the producer price index, or the wholesale price. That is expected to stay at 8.6, right? And then on Wednesday, we get the CPI. We're getting German CPI on Wednesday as well, actually. So that's expected at 4.5. The HICP is expected at 4.6. And the US CPI, and I look at the headline, a lot of people like to look at the core because it doesn't include food and energy, but we all need to eat and use transportation, don't we? And heat our houses, and especially in the winter. So that's expected even to go up to 4.3. But as you see here, CPI 5.8.6. So it's not, but it's not going lower. And I would say if we get a 6% number, which is very possible, that could be very interesting. So I think the central bankers are hugely mistaken. I think the head of the Bundesbank, who's resigning, he's going to be proven right that this is all going to lead to inflation. They have wishful thinking, these central bankers, that this is going to be transitory. It's nowhere. It's not going to be transitory, and we could have both. We could have a collapse of the economy and rising prices. I guess the collapse, you could consider it a deflationary event. So anyway, with that, I'm going to go through some of your questions. Dr. Delbert says London Bridge has fallen down. Ben Gray from Cardiff says hi. Billy Dents, Rabia R says thumbs up. Thank you. Stray Dog at play, and people will rebuild the wall and the street even in troublous times. I think, is that turbulent times? Kim Clement. Cheers for beers. Hello, Mario, your sweet wife and Billy. Oh, thank you. Mel Ellis, yeah, there is VAT on silver, but it has never stopped me from buying silver in the UK. The reason, there used to be VAT on gold until 1999, I think. And the thing is, people could get around it. They use it. A lot of dealers were using a loop. They were buying the gold, tax VAT free in Belgium, and bringing it back and claiming the VAT. And so they're like ripping off the taxmen for VAT that they never paid, but it was worth it because gold has more value than silver. So they stopped the VAT because the taxman was losing money because people were buying the gold coins from abroad and pretending they bought it here and claiming VAT back from the taxman. But with silver, it's not worth doing that. So they've kept the VAT on silver. But I think silver is a big opportunity, and I'm going to show you why I think silver is so undervalued, not just against everything, but also against gold. So I've got here 10 or 20 shillings. It's 10 florins, right? 10 florins. These are all coins made out of 925 silver. So this used to be a pound. So 20 shillings or 10 florins used to be a pound. And I've weighed this, and the spot price is around 60 pounds I could get for this silver, right? And here's a sovereign, which used to be a pound, right? So this should be the same, this is 317 pounds, and this is 60 pounds. So this is 5.3 times undervalued versus gold and everything else, because I think gold as well is undervalued against everything else. Am I just pushing silver? No, but I think silver has a lot more potential than gold, but that doesn't mean I'm going to get rid of my gold. All I'm saying is that silver is a steal, I think, personally. The other, and the interesting thing, it didn't matter what country you were. There's some florins. Oops, there's some florins here from Australia, as you can see, and the florins from England or the UK. So it's the same coin. So we've got a super chat, HZJ79. Thank you for your super chat. I know you appreciate finer things in life. Omega has caught up with Rolex, and the word is they will be increasing their prices significantly. Time for a new tangible asset, Mario. I think the high-end Swiss watches are always a good thing to have. They hold their value. I bought mine in 2003, not because I wanted to. I bought it because I liked the watch, but yes, it's gone up in value, or it hasn't really gone up in value. It's the money that's gone down. So let's go over this article here. I showed this before I started officially the live stream. It's from the Daily Mail. I usually don't buy newspapers, but I just felt like buying it yesterday. And it says here, Bailey, I'm very sorry for rising inflation. So that's the governor of the Bank of England. The markets are very surprised this last week because they're supposed to raise rates, but they didn't. So let's go through this. And he should be sorry because it's because of him that we have rising prices and because of all the central bankers. But he doesn't blame himself, even though he's saying he's sorry. So Bank of England Governor Andrew Bailey has apologized for rising prices just a day after refusing to act to tame inflation. So you see, at least whoever's writing this realizes that it's the central bank that creates or tames inflation. Bailey said he was sorry that households were being squeezed and conceded that inflation was biting on their finances. But his comments to BBC Radio 4 today's program came after the bank's rate-setting monetary policy shocked traders by keeping interest rates at their record low of 0.1% on Thursday. This comment here from this reporter or writer doesn't make any sense because it says a hike in rates was widely expected and would help tame inflation by encouraging households and business to spend rather than save. I think this person meant encourage households and business to save rather than spend, and that's how you stop the rising prices. So I thought that was interesting. But towards the end here, this is what Bailey said. We expect interest rates to rise. We've been very clear, and that's deliberate. But in a blow to savers who have suffered through rock bottom rates since the financial crisis, Bailey said rates would not be returning anytime soon to the levels seen at the start of the decade. I don't know what decade he means because at the current decade, it started last year. Rates were at 0.75%. And if you go back to 2010, rates were at 0.5%. So he's saying he's going to raise rates to 0.1 from 0.1, but it's not going to get near 0.5 or 0.75 anytime soon. So I think that's a huge signal that they're going to keep inflating like mad. And it's not just the Bank of England. We saw that Christine Lagarde of the ECB said that she's not going to, most probably not going to raise rates in 2022. So I think they're going to, we need to be patient and hold on to our hard assets and our precious metals. The warm-hearted genius, thank you for your super chat. Is that Korean won, I think? Yeah, I think it could be the won, Korean won. Frugal Men, 16 Monaco 16-pound mugs are more of an intrinsic ripoff than Royal Mail. Yeah, Frugal Men, I don't set the price on those in the Teespring store. I'm going to see if I can change it. Some of the price, they're not all that, I don't know, they're different prices. Some are more expensive than others. I don't know what's going on there at Teespring. I apologize. So there you go. Mr. B, Joanna Lumley now pushing for the government. Yeah, I know. She's a friend of the Rothschilds. She's pushing for wartime rationing. I'm sure she's not going to be rationing anything, nor Lord Rothschild or Mr. Rothschild. Buffalo R 24 karat gold only ever minted by the U.S. Mint. Yeah, I've got some Buffaloes, the 24 karat 1 ounce Buffaloes. I bought it in 07 and 08. I think that's when they came out. Tears for Beers wants a Billy coin. Yeah, I've spoken about the Billy coin. It's not really practical for me. I've checked with the different mints, and unless I'm gonna have loads of them made, it's really expensive, and they wouldn't ship it directly to you guys. So they'd have to send it to me. And for me, it's not practical to ship it worldwide. So unfortunately, you're going to have to do with the Billy mugs and the Billy t-shirts, maybe. Rusty Benthammer, I've read that central bankers want inflation to encourage people to spend more currency. The shadow banking system relies on consumer spending. Inflation narrative encourages that. It's right. And the other thing, the reason why I keep going on about it is that people, the mainstream people out there who don't listen to me, and hopefully more new people will, is that they think there won't be inflation because these guys are basically liars, and they're trying to fool people, saying that, oh, don't worry, it's going to come down. But we're still, your purchasing power of your currency has been debased every year. And even if it goes back down to 2 or 3%, you're still getting ripped off. What we really need to see is the CPI or inflation go negative so that we can gain back some of the purchasing power. But that will never happen. That happened actually after World War I. And I'm going to show you some data from the Minneapolis Fed. Thomas, thank you for your super chat. WNY says, West New York says, hello, silver is going to run, Mario. I feel it sooner rather than later. You could be right. Let me show you this here. This is from the Minneapolis Fed. It's CPI going back many years. So here we go. Consumer prices, 1913. I guess that's when the Fed was created. But look at here, the annual percentage change, 1.3 in 1914. That's just when the war started. In the 1915, it was 0.9. So that was pretty steady there. But then the war kicked off, and the U.S. was providing a lot of stuff to the warring nations. U.S. only joined in 2017, but look at what CPI did: 7.7, 17.8, 17.3, 15.2, 15.6. So huge inflation during World War I and just after World War I. But look what they did. They did let the economy deflate, because you had a drop of 10.9 in 21 of the CPI and a drop of 6.2 in 22. And then the economy picked up. But I think they should have let it deflated even more. And I think they didn't in the roaring 20s. And that's why we had this here as well. I think this is all because if you look at how much it went up, we should have gone down more here. So when people say that we're going to get deflation, and because a lot of people say inflation is the CPI, and I always disagree with that, but let's go with the mainstream definition, right? So yes, this was the Great Depression. So there was negative CPI. We had a negative CPI here towards the end of the 30s. But if you go forward now, after the war, there was a negative 0.3% in 55, right? So here we go. So it's all compounding, accumulating. So 1955, and then we had a minus 0.4 in 2009. So, I mean, you're telling me that central bankers really like to fight inflation? I mean, we've had negative. That's why when people say we're going to get deflation, and they say that it's negative, they're always scared of. They talk about the lower bound. We don't want to see CPI go below 2%. But since 1955, we've had a measly minus 0.4 in 2009. And we had a measly, let's see, minus 0.3 in 1955. And I mean, last year was 4.8. I think this year is going to be 5 to 6%. And yeah, what I want to see is it go negative so the currency can gain some value, but they'll never let that happen. So, okay. Spanish John has a question. What charges do I pay when buying gold, bullion, and coins for investment from USA and shipping to the UK? Yeah, Spanish John, I wouldn't buy gold and silver from the US, not because I don't trust the dealers there, but you're going to get a lot of JIP. You're going to get import duties. Yeah, you're gonna have to pay VAT on silver, even though you don't pay in the US. I recommend, and I actually got here. Let's bring this up. I mean, I tell people that they should do their homework, but I've been doing business with gold investments since 2002. As you can see here, it's a family-run business, and I used to deal with Mike Temple, and now their sons, his sons, sorry, Oliver and Simon are there. And if you use promo code Monaco64, you get 0.5% discount. And you've got all the details in the description of all my videos. So they will match any price from any dealer in the UK, and you get 0.5% off. They'll ship it. You probably get it the next day, latest 2 days. And they won't sell you anything that they don't have, and they won't make you wait for days or weeks. So this is who I recommend. Yeah, and I have bought gold from the US Mint years ago, but they stopped selling to foreigners. So there you go. Okay. Billy, yeah, he's woken up. Yeah, someone's talking about dog food. Not the dog food we think. Yeah, Echo, that's they'll give you a better deal, and they will match, if there's a dealer somewhere else with a better price, they will match it. You just have to tell them. Okay, let's look at some charts. I'm going to bring up, we're going to look at the chart of gold in dollars first. So let's bring this up. And I'm going to, okay, this is a long-term chart. As you can see, it's a monthly chart. And if you look here, back in 2011, 2012, we tried to break back above 1800, and we didn't, like 3 times. And this is why this 1800 level, in my opinion, has been so hard to break through now. And last week, of course, we closed above that level. And I just draw a line here to show you where I think the next key resistance is going to be for the month of November. Notice that I'm looking at a monthly chart because it's hard, daily moves and even weekly moves. But if you look here, this line is right around 1832. Let's enlarge that. And as you can see here, let's bring this up. See, these 3 weeks here, we try to break above 1830, 32. And it's interesting that this line now is pretty much where those 3 tops were. So I think that's going to be the next key level, just around 1832 for gold. And I think if we break through there, it could be quite explosive. Yes, they'll probably try to keep it from going there, but I think it looks encouraging. They do manage the price, the bullion banks, but they can't do it forever. If they could do it forever, it would still be at $35 an ounce. So now I want to show it to you, for my UK viewers, the price in sterling or pounds of gold. Okay, here we go. Let's do a 10-year. That's better. So yeah, it was a big move last week. We went from below 1300 to close around 1346, and I think 1350 is going to be the key level. We haven't broken out yet, so I think if we break out of this, it's quite positive. It's the same. It's the equivalent to 1832 in the US dollar. Now we're gonna look at the euro price of gold. Euro. And the euro price is looking pretty good. Let's see, share it. So here we go. The euro price, there was a key resistance here around 1560, and we closed last week at 1571. So that's going to be support now, 1550, 1560. And I think it looks like it's breaking out. So in all the major currencies, it's looking pretty good. I'm going to bring up the Japanese yen as well, because many people talk about Japan, that they've had deflation for decades, but even in old Japan, the price of gold is doing really well, as you can see here. And this trend line here, we've broken it as well. Let me just draw this here. Here we go. So as you can see here, I think that's really bullish. And the fact that it's doing well in all the major currencies is a good thing. So I'll stop at that. We'll look at silver in a minute and just see if you guys have any questions. We've got a super chat. Dimitri, thank you, Dimitri. Any updates on sovereign bond markets imploding, Australia and such? Yeah, I spoke about it in the beginning of the video. I think they're not out of the woods. A couple of weeks ago, Australian bond market was under pressure. We saw the April 2024 bonds go from 0.1 to 0.75%. So the Central Bank of Australia, the RBA, they've lost credibility. Italy as well, we saw a spike in yields, a drop in bond prices last week. They've come back down, the yields, which is positive for the bond market, but I don't think they're out of the woods yet. I think the central bankers and the managers are trying everything to stop that. But that's why I think that the data this week, the CPI data from Germany and the US are going to be really important. I hope that helps. Let's look at silver then. Let's see, I've got silver in US dollars. I've got another long-term chart. So here we go. That's the situation in silver. I mean, I could go further back and look at the huge teacup. Well, let's do that then. Yeah, there you go. There's the huge teacup. Let's do it quarterly. So there we go. That's the huge teacup formation. It's been forming for 40 years. And I guess this is the handle here. That's the handle. Can we do it? Let's see. Can we do it? Let's see. Let's do it logarithmic so it looks a little scale. Logarithmic. Yeah, that's better. So I think we're already broken out of the teacup, the handle. This is the handle here. This is the teacup. All we need to do now, I think, is not even 30 anymore. According to Michael Oliver, who does momentum analysis, the key resistance now is like above, the key level is like around 25. So yeah, I think it's encouraging. Let's go back to a little, yeah. You see, I think it's encouraging that it held this 22 level. We did go down here. It's like retesting this level here. So, and I think 2470, if we break 2470 this week, we could see a lot of stops and the market could go a lot higher. But it doesn't look as bullish, I would say, as gold, but it doesn't look that bad either. It looked like we bottomed here. So now I'm going to look at silver in British pounds, which I usually don't look at too much, but and I think this price is like a total sham because it's so much more expensive to buy silver. I know there's the VAT, but even without the VAT, and I think this is looking really bullish as well, because if you look here from 2013 to last year, there was like a ceiling around 16 pounds. And we tested it just in September again, and it's bounced right off that 16 pounds. And I think it's looking very good too. And let me just draw a trend line here where I think we could see, yeah, you see, if you look at, it's like a falling wedge or falling pennant. Tools, trend line. So I think this is, oops, there we go. So I think, yeah, if we break above like 18 and a half or 19, we could see silver as well trade in an explosive manner in terms of British pounds. And it looks like key resistance after that is 22. It's the $30 equivalent. And this is, believe it or not, the all-time high, 30. I expect that to be broken, really. But we need to be patient. I've been patient. And it's more than just the trade holding gold and silver, in my opinion. Can you guys hear me well? I just got a warning from saying that there's something on with the stream. Looks like it's okay though. So I hope you guys enjoyed that. I haven't really looked at charts that much lately. I like technical analysis. Some people don't. Yeah. Rochelle Fernandez, on central bank CBDC, do you think that the Omarova woman will become the next controller of the currency? And that Brainard? Yeah, that's an interesting question, actually, because I wanted to talk about Brainard, Lael Brainard. Omarova, we'll have to see if they confirm her. I think it's the Senate. She probably will. I mean, she was educated at Moscow State University, which is quite a good, a bastion of free market, right? Moscow State University. Brainard, apparently she went to meet Biden with Jay Powell at the White House. So there's a lot of speculation that Powell is going to be given the boot, and she could become the chairwoman of the Federal Reserve. I hate that word chair. You're a chairwoman or you're a chairman. That's the way I see it. And Brainard is, let's see, I can share this with you guys as well. Dove. So here we go. So here we go. Central bank hawks and doves cheat sheet. So a hawk, a lot of you, of course, know what a hawk is. They're central bankers who want to tighten monetary policy, and the doves are the ones who want to keep rates low, not raise rates, and keep doing QE. I would say they're all doves these days, but be as it may, from this cheat sheet, the latest is that you can see Neil Kashkari from the Minneapolis Fed, ex-Goldman Sachs stooge. He's quite a bit of a dove, excuse me. And Brainard is the second biggest dove. So, and the other thing about Brainard, I've looked at her Wikipedia. She's also into the climate agenda. She's into a lot of the social aspect of things. So she's not really a banker. I think a sound currency is the last thing on her mind. Jay Powell, at least like in 2017, 2018, it did try to normalize things by raising rates. I know now he's not doing that anymore, but I think Brainard would be even more dovish than what we're seeing now. So that's how I see it. Sarge 27271 says, thanks for sharing your knowledge and understanding of these markets. Much appreciated. Oh, you're welcome. The other thing I have that was encouraged on Friday and last week was that the miners also did well, because sometimes you get a day where the bullion does well and the miners don't do well, and that's a bad sign. But it was encouraging that we saw both do well on Friday. Monaco 6 Echo. I saw the Tulip Mania painting from 1640 on Michael Berry's Twitter today. Do you think we are near the highs, such high steer on S&P 500, or way off yet? Well, I would say more the NASDAQ 100. Yeah, I mean, I think we could go higher but I think hard assets, commodities, and gold and silver are going to accelerate and leave paper assets in the dust. So you could have a hyperinflation, and the stock market stays pretty steady or goes up a bit. But I think what will go down very quickly, quicker than the stock market goes up, is the currency. And I measure currencies not versus each other, like dollar versus euro or yen. No, it's versus real money, gold and silver. And that will be the hyperinflation. It will be measured in gold, because in the Weimar hyperinflation, the Reichsmark was measured versus gold, because back then, the dollar and sterling were as good as gold, or the dollar really. The three cities of the obelisk, Rome, London, and Washington, D.C. Billy Mania. I've got here, I'm going to get up to get it for you guys. I bought this engraving years ago, and I had it framed. It's the South Sea Bubble, and it's people on Change Alley trading the stocks of the South Sea Bubble in 1720. And the Change Alley is still in the city of London. You can walk there. It's really quiet now. I love this. There you go. The Change Alley, 1720. I think Isaac Newton almost went bankrupt because he invested in the South Sea Bubble. And the South Sea Bubble, I've gone through it. There's a book that I have here about, markets and manias. It wasn't just the South Sea Company. They had the little mini South Sea companies, a little bit like the altcoins nowadays. So they had all these different endeavors. One of them was, we're going to create this company to create something that we can't tell you, but it's going to be of huge benefit to society. And it went through the roof. And then everything collapsed, right? The South Sea Bubble in 1720. So I'm going to put it back up here on the wall. There we go. Hunter Biden painting. No, I don't have any of those. I said altcoins. I think, there's a lot of altcoins that will go to zero. I don't think Bitcoin will go to zero. It could go a lot higher, but I think there's too much, you look at the mainstream media, they're all going for Bitcoin. They're encouraging, the retail investors to get into it. And I think it's a sign that we're getting near a top. In terms of time, not in price, it could go a lot higher. And I think it's a little bit like could be a little bit like the 90s mania in the dot-com bubble in the internet. And I think the blockchain has bright future. So people need to be very careful how much they risk, their hard-earned wealth into cryptos. So, I mean, I have exposure to cryptos, as some of you know, but the real place that I want to be really focused on is precious metals. Some people say, why don't you talk more about crypto? Well, because there's already too many people talking about crypto, and my preference is for precious metals. So, that's the way I see it. Benoit Guillou, since you like technos, can you explain us why prices in the markets evolve within straight channels? I have a clue about why, but no public voice or legitimacy. I think markets are a little bit like mathematics in nature, and that's why, we have channels and things like that. And yeah, we have cycles as well. It's a really interesting thing. And we are always trying to guess where the technicals are going to go, either in an hour chart or a daily chart, weekly chart. Yeah, I think, a lot of people don't give technical analysis much credence, but I do. I like both. I like the looking at fundamentals and technicals. I think there used to be a guy, I forgot his name now, but in the 20s or 30s, and he believed, that things repeated themselves. And that's what a lot of people do. They look at cycles, they look at formations, and some of the formations, like, falling wedges or flags or double bottoms, triple bottoms, they mean something, emotionally about the markets. Scott, thank you for your super chat. I went to a jewelry store in Malvern the other day, and they said they don't sell precious metals to customers. Would there be any reason for that? Some jewelers, it depends on the jeweler. So I guess they're not interested. They're probably not interested in buying and selling gold, bullion. They do jewelry. There used to be, there used to be a jeweler in the city of London that used to basically deal like a bullion dealer. So, and I wouldn't recommend buying gold and silver coins from jewelers, because they usually put a pretty high price on the gold and silver. I recommend a bullion dealer. I tell people to do their homework, to look around, but I also have, as I've said earlier in this live stream, I have a deal with Gold Investments. They've been around for 40 years. It's a family-run business, and all the details are below in the description. I have a promo code with them. You can call them on the phone. It's Monaco64. You get a 0.5% discount off the price, and they will match any other dealer in the UK. And they won't sell you coins or bars that they don't have. So you're going to get it the next day. Sometimes it might be 2 days, depending on the service of the post. But yeah, I recommend you call them and you tell them you Monaco64, and you can talk. Their brothers, Oliver and Simon Temple. I used to deal with their dad. Mike, he's retired now. So there you go. Yeah, gold sovereigns are really great size. They're like about a quarter of an ounce, just under it's 0.2354 of an ounce, gold sovereigns. I think the spot price is 317 right now. I remember when they were 50 pounds around in the early 2000s. So the gold sovereign hasn't really changed. It's the pound that's gone down in value. Mohammed Shaban says bullion by post has high premiums. Yeah, I mean, as I said, gold investments, they will match anyone else. You know, there's Atkinson's bullion, they're good. I've dealt with them before. But yeah, and there's also ATS bullion, there's a few others. Echo prefers gold sovereigns to quarter of an ounce Britannias. Yeah, same here. Gold sovereign is actually legal tender. It's a 1 pound, technically. Jim Jones says, visit the Teespring store. Great mugs. Yeah, unfortunately, some of the mugs, the prices have gone up and I can't do anything about it. But yeah, they're nice, the mugs. I have my Barry the BOE mug. I bought a mug last week because I designed these Let's Go Brandon mugs with Billy on it. I bought one of those. I haven't received it yet. James Peter Millward says the biggest reason to buy metals is for the privacy aspect. Yeah, once CBDCs are introduced, that's a huge part of it. So yeah, we looked at the technicals, the prices, and everything. Yeah, that will be nice as well. And I truly believe that the fiat currencies are going to keep sinking against gold and silver. I know it's not in a straight line. I know the markets are managed, but they can't hold on. They can't keep the lie going forever. It's like they can't fight nature, because that's what it is. Because the currencies that they create are like lies, total lies, but gold and silver and real things are real. So they will manifest. But I agree, for privacy is James Peter Millward. Great point, actually. Carlos Garcia, sovereign. No, it's 0.2354 of an ounce. Carlos Garcia, of a troy ounce. So it's just under a quarter of an ounce. It's not a tenth of an ounce. There is a half sovereign, which is half of 0.2354. Steve F., what is the smallest gold coin available for a small investor? I think I've got one here. Let me get it out of this place here. Let's see. I used to have an account with Gold Money, and I actually asked them to send me the gold. And it's a maple leaf. It's what is it? 1/20th of an ounce. So there you go. That's tiny. But there's also a 1 gram. You can buy a 1 gram nugget. So 1/20th of an ounce. Let's see how much is that. 31.1035 divided by 20. So that's 1.5 grams. That little one, it's a maple leaf. Let's see if you can see it. There you go. There's the queen. And then it's quite a nice coin, Canadian. So that's 1/20th of an ounce. Question from Silver Highwayman: why is the sovereign weighed in avoirpois ounce and not troy ounces? Gold is always measured in troy ounces. Yeah, I mean, the sovereign is 0.2354 of a troy ounce. And I think the troy ounce is the same thing as AVP ounce. There's another ounce that's not the troy ounce. That's 1 ounce is 28 grams, but the troy ounce is 31.1035 grams. So it's not the sovereign, it's just a convention for gold is troy ounce. So you need to be really careful when people say, oh, I want to buy an ounce of gold. It's not 28 grams, it's 31.1035 grams, troy ounce. Helsinki, if the CBDC are in full effect, could the government then impose a tax when exchanging to buy something like a car? Of course, they here in the UK, when you buy stuff in the shop, the VAT is already included. I don't know where you are, Helsinki, but they could do anything with the CBDC, especially if people buy into these passports, right? Because of the crisis, they could track you. And have you wondered why all these big businesses want you to have QR codes? That I refuse to put these QR codes on my phone. And so they want to track you, if you drink too much coffee, they're going to stop you like buying coffee or so on and so forth. They could do a lot of stuff to you with these CBDCs. And like James Millward said, that's why you need to have a gold and silver. And gold is more of a wealth preservation and savings. Silver as well, but silver, you can use it as currency easier, smaller coins. And I'm sure there will be a lot of people that will want to so we got another minute to go. I'll take a couple of more questions and then we'll call it a night. Total bell shit. Interview with Julian Chamberlain went off on some tangent. Maybe, but I think he's a really interesting guy, and he had interesting things to say. He's not an economist, but I think he's cleverer than a lot of the City of London and Wall Street economists. He's a carpenter and kitchen fitter, but he knows his stuff, I think. Marcus says, have you done any research of the remaining years of silver left in the ground at current extraction rates? No, I haven't. I haven't done any research about that. On gold, I think it's been about 20 years since they've had a really big discovery. But silver is more of a, I'm going to be actually interviewing a guy called Jack Gamble. He's got a new YouTube channel. He could help us with that because he wants to talk about what's happening in China with Evergrande and the supply of silver. So I think I'm going to be interviewing him on Wednesday, and we're going to talk about silver. Rusty says, I think silver will really start to rally when the stock market turns down after the current melt up. What do you think will happen to silver in the stock market sell-off? Well, I'm not sure if the stock market is going to sell off because the central banks are going to be pumping the fiat currency into the system. But what I think will happen is that gold, silver, and all and the hard assets will outperform the stock market. So they will gain in fiat trash, i.e. dollars, confetti dollars, but they will lose against real things. So in a hyperinflation, it's really difficult to value things. You have to value silver versus the NASDAQ, not against the dollar. So with that, I'm going to call it a night. I'm going to thank you all for participating and wish you all a great rest of the weekend. And yeah, and I'll talk to you tomorrow. Bye.